Hi friends, welcome back to my channel Modern Quantity Surveyor Key Skills to Have. We are going to talk about the fifth competency from RICS for a quantity surveyor, which is accounting principles and procedures. So, this competency covers the basic principles of accounting and the interpretation of company accounts in order that reasoned advice can be given to clients. We need to demonstrate knowledge and understanding of accounting concepts and the format and preparation of management and company accounts, including profit and loss statements, cash flow statements, and balance sheets. Some examples within this level are the general accepted accounting principles relevant to the candidate's geographical area of experience and how property is treated in an entity's accounts, international accounting standards, and how property is treated in an entity's accounts prepared under IAS, an entity's financial results, and basic accounting principles including balance sheets, profit and loss, and cash flow statements, as well as the role of the auditor. So, what is accounting? Accounting is the language of business. It is the system of recording, summarizing, and analyzing entities' financial transactions. Effectively communicating this information is key to success of every business. So, as per the RICS, as a quantity surveyor, you need to have the basic or at least understanding about these 10 concepts at the level 1. So, let's look at each one of these now. So, balance sheet. Balance sheet reports the amount of assets, liabilities, and stockholders or owners' equity at a specific moment or point in time. Next is the profit and loss account. It's also called as the income statement, and it's a financial document which summarizes the revenues, costs, and expenses incurred during a specific period, usually a fiscal quarter or year. And then the third most famous financial statement, cash flow statement. This is one of the key financial statements which provides insights into the cash generated and used by a company during a specific period. It's also good to know what is a S-curve when we talk about cash flow statement. The S-curve, it stands for standard curve, but it also takes the shape of the letter S when shown in a graph. An S-curve shows how spending is usually lower at the start and end of a project. In the beginning, costs are lower because you are just setting up the site and doing basic less expensive tasks. At the end, spending is also lower because most materials are already on site. There are fewer workers and contract overhead is reduced. The next competency is about revenue and capital expenditure. Revenue expenditure refers to the cost incurred in the day-to-day operations of the business, such as salaries, rent, repairs, utilities, etc. Capital expenditure refers to the funds spent by the company to acquire, improve, or maintain long-term assets. For example, purchase of machinery, property, and equipment. Taxation. Now, every one of you knows that taxation is a levy charged by the government on individuals to finance the public services and infrastructure. So, there are two types of taxes: indirect taxes and direct taxes. Direct taxes include the income tax, property tax, and so on. Indirect taxes include the VAT, sales tax, so on. Auditing. Now, auditing, it refers to an official examination of an organization's accounts to ensure that money is spent correctly. There are different types of audits such as financial audit, tax audit, cost audit, management audit. Auditors come in behind accountants and verify their work. They examine the financial statements prepared by accountants and ensure they represent the company's financial position accurately. We will talk about next one, ratio analysis. Ratio analysis is a tool used in financial analysis to assess a company's performance by calculating relationships between various financial statement figures. It helps in interpreting financial data, comparing it across time periods or companies, and making informed decisions about a company's health and operational efficiency. So there are three different reasons why ratio analysis are important for companies. First, ratios allow comparison between companies in the same industry as well as between different time periods for the same company. Ratio analysis helps identify trends over time, enabling stakeholders to predict future performance. It also provides valuable insights to investors, creditors, and management for decision-making purposes. So there are different types of ratio analysis which are used to assess a company's financial strength, such as the liquidity ratio, investment ratio, gearing ratio, profitability ratio, and financial ratio. For example, profitability ratio, it tells us how effective the company is at generating profits given the sales or its capital assets. And the financial ratios, it shows the rate at which the company sells its stock and the efficiency with which it uses its assets. Next terminology is credit control in the accounting competency. So credit control refers to the policies and practices that a company uses to manage its credit sales, ensuring that customers pay on time and the company maintains healthy cash flow. Effective credit control is essential for reducing the risk of bad debts, minimizing cash flow disruptions, and maintaining profitability. So what is profitability? Profitability refers to a company's ability to generate earnings compared to its expenses and other costs incurred during a specific period. It is a key indicator of financial health and operational efficiency, helping businesses and investors assess how well a company uses its resources to generate profit. The last terminology is insolvency. Insolvency is a financial state in which a person or business is unable to pay its debts as they come due. It represents a critical financial problem where liabilities exceed assets or where there is insufficient cash flow to cover the obligations. Insolvency can lead to legal proceedings such as bankruptcy depending on the laws of the jurisdiction. So, above we have seen a few terminologies about the accounting competencies, and we have just read it very briefly. So what you can do is to get more comprehensive knowledge about this accounting principle, which is very critical for all the quantity surveyors. You can read the articles on the RICS website, read the construction and property journals, read the industry news such as the Irish construction industry news, UK building industry news as shown in the right side of the column, and also see how your country's laws impacts each of these competency. Lastly, a tip from Benjamin Franklin: beware of little expenses, a small leak will sink a great ship. Thank you. So please learn at least one competency a week. Are you ready? Please subscribe to my channel, Modern Quantity Surveyor. Thank you and enjoy.